We got inflation data this morning, and I wanted to break down core CPI and where I believe it'll go from here. I want to specifically focus on my TLT ETF trades as well as TMF ETF, and then finally TBT ETF. Now, I am moving heavily into TBT ETF. I believe that the market is going to shift somewhat. We've seen a lot of volatility and this will spike up. I'll get to that chart in a minute, but mostly what I'm going to be looking at is the entire broad-based economy, breaking things down, showing you what I think is going to happen with the stock market, the bond market, and how that will affect TLT ETF. Now, a lot of you guys follow me for that content, specifically my TLT ETF content. I will continue to hold this position. I think TLT ETF does move down from here, and I'll explain why in a minute. But this is the chart we're really going to be focusing on today because it is the core CPI inflation data, and as you can see, it's kind of moving downwards. Now, I have a couple other charts there, specifically the money supply, the M2 money supply, and let me give you a hint up front. Inflation increases the supply of money, the rate of growth of increase, and this is the annual rate of growth for the core CPI that you're looking at here, as well as consumption and personal incomes, which we just got those data points about 2 weeks ago, on Friday. What we're seeing is a continued slowdown in the overall economy. The consumer themselves are spending less. We're seeing a decline in consumer expenditures, which translates into, of course, the core CPI moving lower, which should have sent TLT ETF higher. And I'll explain why that didn't happen as well. So I am shifting some things up here. My focus is primarily Substack. If you're watching this on YouTube, thanks so much for following along. But what I am doing is I am shifting things and I am repurposing all my videos from Substack into my YouTube channel instead of the way it was before. You can follow along here. And what I'm doing is I'm breaking things down into more manageable content, and I'm trying not to flood everybody's email box as much as I can. Specifically, now, whenever I break down economic indicators and how they affect the stock market, I'm going to write everything up. And it's a very long email, and I break everything down. For those of you who are just getting the email, this is the top portion of what you'll see. The second portion, if you scroll a little lower, what I've put in there is a bunch of stocks that I've been doing analysis on that didn't make an email. Again, I don't want to flood everybody's email list. If you're following me on YouTube, you're probably getting alarms or getting content showing up. Thanks for following along on that. Sign up for the description. In the description down below, you've got the links to my Substack and my website itself, which is one and the same. But you would then get this email. You could choose to subscribe or not, but it will have the video in there. And unfortunately, I couldn't show that because I'm still in the process of writing that particular article, which is attached to this video. SPY ETF. This is the S&P 500 SPX ETF. And we've seen some selling. And I think from the very peak around February 18th, 19th, we saw everything sort of sell off. From peak to bottom just yesterday in SPY ETF, the move down was 9.98%, a pretty solid correction. The NASDAQ, which saw a bigger chunk of the selling because of NVDA Stock and Tesla and a few others, saw selling that is now right around 14% peak to bottom, peak being, I think, February 18th and bottom being yesterday, assuming that that was the bottom. We've got a deadline coming Friday night for the federal government to pass a budget. We'll see how that plays out. So I wanted to kind of break down SPY ETF and where I think it's actually, we're going to see a bottom here and that we'll see volatility decline significantly. And I actually put SVOL ETF, which is an inverse ETF. Volatility spiked up, SVOL plummeted. I've got that chart. It is quite pronounced. And I'm long via options. So, and I'm already more than break even. I think I've doubled my money on that already. What's going on with the broader market? Now, of course, we have NVIDIA stock. Here's a look at NVIDIA stock. NVDA stock is the ticker symbol. DeepSeek hit late January. and basically shuttered NVDA stock. Sold off abruptly. It made it back up to that level where just before it kind of sold off, but then has been selling more. Now it looks like it wants to bounce a little bit. NVIDIA, so you have three main things that are happening here. The tech stock sell-off. That is because NVIDIA and Tesla and a few other stocks are such a big portion of what's going on in the broader NASDAQ, seeing those particular stocks slow down their rate of growth and then investors exiting was pronounced more so with QQQ ETF versus SPY ETF. Again, respectively, QQQ ETF was down 14% and SPY ETF is only down about 10%. So that's a big chunk there. The other portion, of course, is the slowing economy. I'll get into that in just a second. Walmart stock, of course, about 2 weeks ago, was it already? When they pushed out their financials in their conference call, they said that they're seeing the consumer slow down considerably. A. B. Their biggest growth is anybody earning more than $100,000 per year. Families earning $100,000 per year. That's where their growth is, their biggest growth percentage. Traditionally, Walmart does not cater to those individuals. Now, all of a sudden, that's their fastest growing segment. What's happening? The consumer is slowing down. The consumer is stretched too thin because of price increases. We don't even need to bring up the price of eggs. So we're seeing Walmart stock. You saw NVIDIA get hit for tech-related growth rates slowing down. Then you see the basic common economy itself selling off with Walmart stating, listen, we're lowering our forward guidance. The very next day, University of Michigan consumer sentiment came in, and this was a pronounced drop down. There's a strong correlation to consumer sentiment and personal incomes and expenditures. So if we see a pronounced drop downward like this, this means cause and effect relationship that the consumer themselves is done, slowing down. We just saw that with core CPI, that the consumer isn't pushing price levels as much, and because of that, we saw that decline in core CPI. But a lot of this was also housing. Now, fortunately, overall prices, we're seeing a lot of activity in Florida with price declines. I've seen this statistic, and there's a blogger that I follow, a YouTuber that I follow, and he's real good about his data points being accurate. There are some 2 million homes sitting vacant in Florida right now, and which is a pronounced higher number than normal. So housing costs are starting to fall, and that's one area. Texas is seeing some issues. We're seeing a lot of areas where housing costs are moving lower, and that will affect overall core prices. Now, this translates into what the Federal Reserve could do. Remember, they have a dual mandate. Price pressures is one thing, unemployment is another. But it all comes back to the M2 money supply. Core CPI, money supply, expenditures, Michigan sentiment, consumer sentiment. The growth rate in the money supply is pausing. Now, on the one hand, the Federal Reserve is shrinking its balance sheet significantly. On the other hand, where the Fed has been reducing its balance sheet, the commercial banks have been lending more and more and more, and this has spurred business activity and consumer activity, but now all of a sudden that's pausing. Because of that, the money supply will contract if we start seeing negative numbers here, and that's something I'm kind of looking forward to over the next 2, 3, 5 months for the M2 money supply. The money supply, the rate of growth, will dictate just about everything, including asset prices, gold. Again, another chart that I have in this video. but we're moving forward. Here's an also problem, if you will. NASDAQ, of course, is sold off significantly. Tesla stock erased all its Trump bump, inauguration, victory. That's all gone. Now it's a matter of, well, have you seen the numbers coming out of Europe, Germany, Norway, where they're looking at 70% declines in auto sales? Now, Tesla itself is more than just an auto company, of course. And one thing is they'll sell a car, then they'll sell a credit in order to really boost their revenue and margins, if you look at it from that perspective. Well, you have to sell those cars first. So I think Tesla stock, TSLA stock, is in big trouble in the future because of the shift rightward that Elon has done so aggressively. So it all boils down to the U.S. 10-year Treasury yield. So you have the money supply that's starting to restrict itself. That brought the inflation rate down, but this is driven by consumption and incomes declining. We will see unemployment grow. So the Federal Reserve, from that perspective, could look at that and say, cool, we don't have to raise interest rates. At the very least, we can keep them here for just a bit longer. Let's see how these price pressures hit with tariffs. But from there, we'll eventually be able to lower interest rates. That's the Federal Reserve, kind of in my framework, what they may be looking at. In the meantime, the big move downward in the U.S. 10-year Treasury yield was largely done because of investors fleeing the selling in the stock market. Remember, NASDAQ down 14%, and rushing into treasuries. By rushing into treasuries, they're buying up as much as they can, pushing up price. There's an inverse relationship between price and yield. Yield has dropped, but I don't think yield has dropped commensurately versus the selling we've seen in the stock market. And that's a key thing for the U.S. 10-year Treasury. Now I'm looking at what's going on with regard to the front months of the Treasury yield curve versus the long end of the Treasury yield curve. For me, I'm looking at, we're going to see investors leaving the Treasuries now, getting back into stocks. We could see a bump as long as we also see some resolution with what's going on in the federal government with their budget. So here we are, TLT ETF. I think this comes right back down, plain and simple. But I'm not selling my TLT ETF. I'm still looking for an eclipse of the 100 price with conviction, but very likely I am dumping as soon as we get to 100. Now my average price is roughly starting right around 87.50 for the buy. So I'm up a little bit, but of course, a couple of weeks ago we were below that. I didn't budge, plain and simple, and I'm going to keep going with that. SPY ETF. This is more of the front. This is the 1 to 3 Treasury Bond, or this would be notes, actually. So notes and bonds and bills. Bills, notes, and bonds. That's the categorization. Bills are like 3 months, 1 month. Those are just simple little, hey, listen, we got to float something for just a little bit. Notes are 1 to 10 years. Bonds are 20 to 30. Outside of the time frame, there's really not much of a difference in what they're called. SPY ETF deals with the 1 to 3 year Treasury notes, sort of the front end. Now, my expectation here is simple. The Federal Reserve will have to shift once we start seeing the effects of tariffs. We do have tariffs on China, and I think they're 20%. Some tariffs on Canadian. I think we just got 25% on steel. And who knows what else. Quite honestly, it's so... Yeah. So, where does this put things? One of the things that I've been saying repeatedly, and I've not heard anybody else really talking about, is the fact that you're going to see a lot of backlash. Canadians are walking by anything with an American flag right now in the grocery store and any other products they can. in the Tesla parking lots, the dealerships are literally getting vandalized. So you will see backlash. This will reduce revenues for American companies. The Federal Reserve will have to shift policy, and because of that, when they start lowering SPY ETF, I expect SPY ETF to take off higher. In the meantime, because of the move back out of treasuries into the stock market, this is where I think the opportunity for the dip in SPY ETF happens, along with TLT ETF falling as investors sell off their treasuries and get back into stocks. I really think that this sort of sell-off is done for now, that the economy itself is still moving forward, although the chaos from tariffs and everything else going on will still keep some from moving forward with buying too heavily. Tariffs are not a pro-growth environment, plain and simple. So we will see the stock market moving lower. We will also see reduced economic growth along with higher unemployment, plain and simple. This is what I'm in on right now. TBT ETF, bought some just yesterday. I'm long. I'm not looking for a big run. TBT ETF is the inverse to the bond treasury. So this is the flip of TLT ETF. And I believe this spikes up just a couple bucks, maybe $1.50, $1.25, somewhere in there. I'll take that. Plain and simple. I'll take that, pull that profit out. I'm likely to move that into TMF. TMF is a 2x. It's a multiple of what the bond market would move. So as TLT falls, TMF ETF will fall faster. TBT ETF will move up. I will take my profits, then buy those TMF ETFs, let that rocket back up, par up with TLT ETF, then I'll take that profits, and I'll probably get right back into TLT with that. I know it's a bit confusing, but it's sort of a continuously hedging strategy, and I'm very successful with this on a regular basis. And it's really, this is short term. From time to time, I'll get a comment in the comment section saying, hey, you put this video up 3 months ago, and now this is at an all-time high. Yeah, that trade lasted all of 3 hours 3 months ago. So I'm going to be in and out of this probably fairly quick. I doubt I'm in this longer than the end of next week, if you're watching this Wednesday the 12th. SVOL ETF. This is the inverse to the VIX, one of them. And yesterday I bought in on some calls, some $20 calls. I paid 10 cents. These calls are trading at 25 already. Maybe I'll take that. But I think that this thing could jump up to about 50, 60, 75 cents. I can quickly take that. They expire in April, the end of the third week of April. So I've got plenty of time. My thinking on this is real simple. The selling will sell off. The tariffs will probably be backed off somewhat. Simultaneously, we will see some resolution with the federal government budget. And because of those factors, the VIX will settle down. Now, the VIX is a mathematical equation of at the money puts and calls, the value of those 30 days out. So if people start dumping their overall sizes, that reduces the VIX. Price starts dropping, the VIX starts falling, SVOL ETF shoots up. This is one of my favorite weapons. I've been very successful at this. I do not necessarily think SVOL ETF shoots back up to its high, because I also think that that we're long-term going to see, say, SPY ETF falling. I don't think we see those highs again the next 4 years. That it'll take some kind of maturity to be brought into the situation to settle the economy down, get back into relationships with our trade partners, normalize things, and get back to business. Plain and simple. In the meantime, that's my trade. I hope to be out by the end of this week. If I can take a quick 50 cents, I will take that so fast. These, if you look closely, SVOL ETF doesn't really necessarily move too much. It's it's easy to get like once it bottoms out like this, it's easy to catch that right up. And I'm very effective at that. This is one of the things that I make a lot of money on. So TLT ETF, I expect to go down. I'm in the TBT ETF inverse to the Treasury Bond funds. I expect that to spike. I'll take those profits once I get to a point where I'm like, okay, cool, I've made 40, 50, 60, 75 cents off that. Who knows? We'll see how the next 2 days play out. I will take those profits. Because TLT ETF and TMF ETF are going to fall like they are, I expect to shift my quick profits out of TBT ETF, the inverse, take those, get into TMF ETF. At the same time, SVOL ETF, I expect to ride this one back up somewhat. I'll take 50 cents real fast. Real fast. 25 would be good. I'm up, I think, 15 right now. Gold. GLD ETF, the price of gold shocks me. Still going higher. I had sold some calls, I want to say back in January, thinking, that looks like it's right. It was towards the end of January. And by the skin of my teeth, those calls did not go in the money. Gold, the price of gold could still continue higher, but my expectation is that eventually the price of gold does fall down. I don't know of any rational reason other than prices, broadly speaking, are moving higher, but if the money supply starts to contract, the price of gold will fall. Once again, follow me on, go to my website. All these links are in the description down below. Grab the email, you'll get that. You'll be able to see the video up top and all the other videos. If anything catches your eye, please, by all means, click away, watch that video. For those of you who subscribe on my premium, thank you so much for the support. We'll see you in the next video.